Today is Friday, March 27th, 2026. The silver market is about to get a final answer. It has waited 5 months to hear the real number. This is not a prediction or model output. This is not an analyst projection. This is the actual physical count. It shows total ounces of real silver leaving COMEX vaults. This happened during the most stressed delivery month in modern exchange history. That number will be published today. Everything depends on where it lands. Single threshold decides the direction forward. It will affect May delivery setup. It will affect physical premiums. It will affect the paper-to-physical relationship. I have tracked COMEX delivery data for months. It started before the January surge. I explained coverage ratio math in February. I showed what happened on February 27th. First notice day demanded 52.63 million ounces. That was 61% of registered inventory. It happened in a single morning. Today the delivery window closes. The March 2026 contract is finished. The final number is being calculated now. CME Group will publish it before market close. You must understand how to read this number. Most investors will misunderstand it. They will focus on headlines. They will react emotionally. They will celebrate or panic. They will miss the key threshold. That threshold separates two different futures. This is not about price direction. This is about physical inventory structure. This explanation gives full context. It shows month-by-month progression. It shows vault-by-vault pressure. It shows the chain reaction effect. You will understand the real meaning, not the headline, but the implication. 3 groups are watching this number. The first group is CME insiders. They are compiling final delivery totals. They track every receipt issued. They track every physical bar moved. They track every converted contract. They are closing the most extreme delivery period. The second group is industrial buyers. These are procurement teams. They ensure factories keep running. They secure silver for production. They already acted earlier. They took delivery in January and February. They front-ran this shortage. They want to know remaining inventory for May. The third group is institutional capital. They are positioning for future demand. India opens silver access soon. New capital will enter the market. SPDR has expanded buying capacity. This equals millions of ounces. All of them are watching vault data. They are not watching price. They are watching supply. To understand today, you need history. March is not isolated, it is part of a longer trend. 6 years of supply deficit exist. Global shortage reached 820 million ounces. This equals nearly 1 year of mining. Silver was consumed permanently. It went into solar panels. It went into electronics. It went into defense systems. It went into private storage. Inventory kept shrinking. Demand kept rising. Paper claims stayed high. At start of 2026, registered silver was 113 million ounces. Then December changed everything. Delivery reached 46.6 million ounces. That was extremely high. January followed with shock. 33.45 million ounces left in days. This was abnormal behavior. February broke another level. Inventory fell below 100 million ounces. That level was psychological support. February 27th created extreme demand. More than half inventory was requested. This sequence built today's situation. Each month reduced available supply. Speculators exited the market. Physical demand increased anyway. Industrial buyers replaced traders. Coverage ratio fell to 13.5%. Stress level is 15%. We are already below it. Leverage reached 7.3 times. 7 claims exist per ounce. At this pace, inventory runs out in months. Math shows around 131 trading days. Total inventory is at 1-year low. It dropped sharply in 30 days. Nearly 38% is gone in 1 year. Most investors will misread today. They will say the system worked. They will say delivery was successful. They will miss the real cost. Registered inventory is not fully available. Some is locked or pledged. Some is allocated already. Some cannot be used immediately. Headline numbers are misleading. True available supply is smaller. Global pricing shows imbalance. Shanghai trades higher than the West. Premium is over 12%. Arbitrage is not fixing it. Supply flows one direction. Metal moves east. It does not return west. This creates two separate markets. Two prices exist. One shrinking supply exists. Today's number defines next steps. It sets conditions for May. If delivery is above 65 million ounces, inventory drops below critical levels. May starts with extreme stress. If delivery is below 50 million ounces, system remains stable for now. Stress still exists, but is manageable. Between these levels, uncertainty increases. Regardless of outcome, key facts remain. Inventory is at a yearly low. Deficit continues globally. Demand keeps rising. Paper silver is risky. Physical silver holds value. Today's number is not sentiment. It is a real count. It shows real movement of metal. Every month sets a new record. Every month reduces supply. The gap between paper and physical is shrinking. The system is approaching a breaking point. The March window closes today.